Why does China buy so much US bonds? 1. Trade surplus, that is, exports exceed imports, which will generate a large amount of US dollar foreign exchange for China. In order to better preserve foreign exchange, the Chinese government purchases a large amount of US Treasury bonds. 2. The United States not only has strong economic strength as a whole, but also has strong political and military strength. In addition, the government bond of the United States have always been able to repay and pay interest on time. Their bonds are very reliable property, with high credit, good liquidity, and strong liquidity around the world. 3. The US dollar is relatively strong, and Treasury bond can not only get interest, but also get additional profits from the stronger US dollar. The role of US Treasury bond. 1. Low risk. China's export transactions are charged in US dollars, so users have a large amount of US dollars in their international reserves. The risk of government bond is small, and the United States is a big country, so it is more secure. 2. Stable foreign exchange trading. The US economy has improved and stabilized. The US dollar is the international currency. Buying US government bond can increase the value of foreign exchange and prevent foreign exchange from shrinking. 3. National development strategic rights and interests. China has a large amount of US dollar assets, and the United States needs to attach great importance to China in order to achieve fair and just dialogue. 4. International stability. As a developing country, China needs more stable development, which can stabilize the United States and carry out win-win cooperation. 5. Stabilizing the financial system and market, ensuring the national economic security and preventing financial risks. The consequences of China selling US treasuries. 1. Once China sells US bonds, it is likely to cause other US bondholders in the world to sell one after another, and US interest rates and US Treasury bond prices will be greatly affected. The sharp rise in US bond yields has resulted in excessively high yields on newly issued US bonds, affecting fiscal sustainability. 2. The selling of US debt affects the main indicators of the risk premium valuation model, and the valuation of all risk assets in the US should be reduced. The decline in the US dollar will increase exports of American goods, while also damaging China's export market, directly affecting the economic growth and employment opportunities of export-oriented companies. 3. If China sells US bonds, then US corporate bonds and personal loans will be subject to large-scale breaches due to the sharp rise in US bond yields, leading to a surge in CDS prices and posing a risk to the funding chain of debt default guarantee institutions. It will lead to the shortage of employment and export-import trade, and the restriction or even closure of international and regional markets. 4. If China sells US bonds, the trust of trading countries in the RMB will collapse, which directly offsets the exchange rate price advantage generated by the depreciation of the RMB. The negative impact of selling US bonds is very serious.